Back, let's take it straight to some macro data which was released this evening. India's retail inflation rate slowed sharply to 3.63% in the month of November. Now remember, this is the first release after the government announced the demonetization scheme. Latha Venkatesh is right here to put all that into perspective. Latha, good to have you on the show. What do you make of these numbers, and is it also because of the demonetization drive to some bit?
Well, it was a very pleasant surprise to get an inflation number which is the lowest since the new series began at 3.63. The last we had was a 3.69 number in August of 2015. The big contribution has clearly come from food inflation dropping like a stone to 2.11%, largely contributed by a fall in vegetable prices and other, vegetable prices fell by 10% year on year and month on month as well by about 7%. Other products like cereals and pulses also have shown a very, very benign movement. Inflation is down to 0.2%. So basically, year on year, there has been no rise in pulses, which has been one of the big contributors to food inflation. The negative point, if you please, is the services inflation, which is, personal services, household services, transport and communication, recreation services, what comes under the category of miscellaneous. That, or we call it core inflation, that one is up to 5% compared to 4.9293 in the previous month. The Reserve Bank has said that it will be looking at services inflation, and that at 5% is not very positive. Again, crude prices will start picking up in the months to come. Those sore points remain, but there is a steep fall in the food inflation and in other allied areas as well. You're going to see this continue up until at least January. Even in February and March, it will be more like 4 to 4.5%. So looks like we're going to average this year under 4.5%, a very, very good number. But it's just that the market is not very sure that this is enough to elicit a rate cut from the Reserve Bank in the next monetary policy.